Progress.
Good evening, everyone. I, CA Hitesh Agiwal, on behalf of the Direct Tax Committee of ICI, warmly welcome you all to today's webinar on registration and taxation of charitable trust under the Income Tax Act 1961. It is my privilege to first introduce to you our chairman of DTC, CA Piyush Sonrajji Chajed. CA Chajed sir is having illustrious career spanning across 25 years. He is a senior partner at Chajed and Doshi. He has been a two-term Central Council member of ICAI and has held all three pivotal standing committees: executive, examination, and finance. Currently, he is heading the DTC and vice chairman of the expert advisory committee of ICI. He has contributed nationally and internationally as a technical advisor at ISB, member of SAFA Fiscal Committee, and as a part of RBI's External Advisory Committee for ARCs. Sir is also on the board of companies like Wimplast Limited, Cello World, and Multipass Limited. His scholarly contributions include publications on direct taxes and reviews such as FAQs on charitable trust. We are honored to have his guidance and leadership today. Piyush sir, over to you.
Thank you very much. सुरेश जी आपको म्यूट करना पड़ेगा meanwhile. I think so. Thank you very much, Hitesh Agiwal, for your introduction. Very respected Central Council member and the Vice Chairman of Direct Tax Committee, Sri Vishnu Agarwal. Great support to Direct Tax Committee, his first term, first year. But his support to the Direct Tax Committee has been great, with which we could do a lot of work this time, especially on this Income Tax Act 2025 and guidance note.
Thank you, sir.
Thank you, Vishnu Agarwal ji, my Vice Chairman. A very senior chartered accountant from city of Surat, a very respected fatherly figure for all of us, for me and my Vice Chairman both, CA Sureshji Kabra, who is a faculty for the day and whose expertise in this charitable trust will be known to you, to all the members. I'm telling you, I know it's a busy season. Taking out 2 hours for you may be difficult, but I'm sure it would be a very helpful for your future, because he's going to speak on registration of charitable trust specifically. When I know 30th September, a lot of people are asking us that 30th September is again a due date for for renewing your registration, because March 26 would be a time when your 5 years will be expiring, and before 6 months you have to apply for a registration. So it's a very challenging time for all of you. So thank you very much, Sureshji, for such a busy schedule and such a time devoting for Direct Tax Committee. Thank you very much, Sureshji, and I welcome you all. Chairperson of Jalgaon branch, who is moderating this session, CA Hitesh Agiwal, of course, very dynamic leader, I would say. And I say it with my pleasure, obviously, because he's been my article also myself. So Hitesh, thank you very much for taking up this responsibility. Thank you very much. And all the members who are listening to me, I welcome you all, and a very good evening to all of you. I know it's a very busy season. I'm getting a lot of messages, so I'll try to touch upon the very important area, because we are today here. The date is 11th of September. And I know most of you would be struggling filing tax returns on 15th of September 2025. Then you also have to comply with tax audit date, which is getting due on 30th of September 2025. And people are asking me that what do you feel? What is your view, whether there would be any extension or not? As regard to that, as you know, of course, Council had taken a decision since last 2 years that officially from Institute of Chartered Accountants of India, we should not make any representation on the extension part, because there was a feeling across the CBDT also that Institute only speaks about extension. So since last 2 years, you would have seen, we have tried to make more representation, which is for the public good. We were involved in the making of Income Tax Act, starting when the drafting was happening. Even after when it was presented, we were the first to be invited at select committee. So we have been considered as a technical expert, and more than 100 plus recommendations were accepted in the draft income tax bill and Income Tax Act. So if I do a comparison, more than 100 suggestions have been accepted by Institute of Chartered Accountants of India. And therefore, I feel that, yes, our concentration would be on that. But at the same time, obviously, we are continuously talking with them and also appraising them of what are the difficulties faced by the members. you may look at our representation, which is now available on the website. So, wherein we had said that these are the issues which are being faced in the income tax return, these are the problems in utility of Form 3CD, and those rectification needs to be done because the due date is approaching with this 15th of September. So, last week itself, I think so, somewhere around 6th of September, we had a meeting with member legislation wherein we gave this complete representations, bringing all the problems to them. Of course, we did not specifically state it. We said that if these are not going to be rectified, there will be an issues in the filing which will not happen on 15th of September. So in our passive voice, we have tried to make a case on that. And I believe, of course, very unconfirmed, unofficially, I feel obviously that the CBDT as well as the members of TPL and the IT wing who is actually looking into it, they are aware of the problems. And but as you all know, we have been seeing that they are monitoring how many returns of income are being filed daily, and obviously they would not like to do anything which stops this return filing. So keeping all our fingers crossed, let's hope for the best. But my request to the members would be, obviously, I know you are under a due, very great pressure. Please do take care. Of course, nothing. I always say heaven is not going to fall if the returns are not filed. Yes, there may be a small penalty to it, but of course, my clients should be satisfied that even if there is small delay, but if it is a more a qualitative return which I am filing, I think so we are doing our job more better. So with this, of course, I'm not going to other things. We have to hear on very important topics. There are many more things. Of course, we keep on discussing on every Thursday. Of course, we were discussing whether this Thursday we should keep this session, but just to keep momentum on, we have kept this session. And again, once again, thank you to the honorable faculty, I would say Suresh ji, a very senior faculty who has joined, and Hitesh Agiwal in this busy season. Thank you very much once again. Over to you, Hitesh Agiwal.
Thank you so much for the inspiring welcome, sir, and setting the right context of this session. Now, it gives me immense pleasure to introduce our Vice Chairman of Direct Tax Committee ICI, CA Vishnu Kumar Agrawal, sir. Sir is a Central Council member in the current term 25 to 29 and currently serves as Vice Chairman of both CP as well as Direct Tax Committee of ICI. With over 2 decades of experience in income tax, he is authority in search and survey proceedings, Benami and Black Money Act, as well as ITAT and income tax litigations. He has authored the book Landmark Litigations of Income Tax, a valuable reference for tax professionals. He is also former chairman of WRC in 2017-18 term and has represented ICI before government authorities extensively. Beyond profession, he is actively involved in social service through Lions Club, RVG Alumni, Bharat Vikas Parishad, and other organizations. We are privileged to have his opening remarks today. Sir, over to you.
Thank you. Our own chairman of the Direct Tax Committee and Central Council member, CA Piyush Chhajerji. Today is the speaker, very senior member, CA Suresh Kabraji from Surat. Today's moderator, Hitesh Agiwalji, chairperson of the Jalgaon branch of WIRC, and all my members attending this particular webinar. First, I thank you to our speakers in spite of his busy schedule, and our moderator also, both have accepted our invitation to deliver the subject on the charitable trust. Friends, today I will not take much of the time, but just brief that ITR 1 and 4 checklist is on the public, upon our website, ICI website. So filing, if you face any type of the problem for filing the ITR 1 and 4, kindly go through the checklist of the ITR, and guidance note for 44AB is also posted on the website of the ICI. So if you are facing any type of the problem for tax audit, so we have just recently revised the guidance note also for 44AB, and our new Finance Act 2025, we will also we are coming out with the Finance Act 2025 in only 500 rupees. So I request each and every member to take the benefit of this particular publication of the ICI. First time we are publishing the Act of the Income Tax Act 2025 in 500 rupees only. So in a couple of the days, you will purchase from our portal. Friends, Most importantly, you can open the our new your new chartered accountant firm, your mirror firm at the Gandhinagar Gift City. So all the guidelines is on hosted on the website. So I request each one of you kindly go through all the guidelines for the mirror firm. You can create more firm of chartered accountancy in the Gift City, Ahmedabad, Gandhinagar. Friends, now I will not stand between you and the speaker, and I request our moderator to introduce our speaker for benefit of large. Thank
Thank
you.
you so much, sir, for your insightful words and strengthening the understanding of the various initiatives of our ICI. Now it is my honor to introduce our distinguished speaker for today, C.S. Suresh Kumar Kabra sir. Kabra sir is a senior partner at SK Kabra and Company, Chartered Accountants. He is practicing since 1986 with nearly 4 decades. Bar Association, Surat. He is also vice president of Rajasthan, including chairman of Surat branch of WRC of ICI during 1995. He has also served as chairman of the South Gujarat Committee of Tax Consultants 2013-14 and co-convener of Direct Tax Committee SGCCI. His social contributions include running two CBSE schools under Maheshwari Shikshan Sansthan Surat. With his vast experience in taxation and his deep involvement in professional and community service, sir is truly an inspiration for all of us. Now I request sir to please take charge of the session.
Thank you, Hitesh Bhai, for the introduction.
Thank you, sir.
The chairman, Sri Piyush ji, and the vice chairman, Sri Vishnu ji, both Central Council member. And I met Vishnu ji somewhere back when he asked me that, can you have a webinar series? Can you come as a speaker? Uh, Immediately I said that, okay, there is no issue. And later on, it was not that it was simple by seeing my face, he just told me, but he started following up. And with the continuous follow up, then definitely I really appreciate uh, CA Vishnu Agarwal that he did not only ask me, but he took a follow up also. So I'm really grateful to him. And today I'm here only because his follow up. Otherwise, maybe possible that I could not have taken this chance. But so kind of you. And Piyush already known to me. And at times at Surat, we have good discussion on various subjects while in election also and otherwise also. So with all these known faces over on the panelist on the screen, I would discuss or start my discussion on the charitable trust. Though at large, before starting into the provisions of the charitable trust, I would say my discussion will be on the basic provisions of the trust and registration. I will not go very technically because the understanding on the basics are very important. Once you are not on the basics and you know the legal and the technical terms, I think it won't help. It is my opinion that it won't help the person who is really into the practice. If you have to do the practice down the line, you should understand what are the specific provisions and how you have to deal with them. Over a period, the provisions regarding trusts have changed such a lot that it is becoming very difficult for a person or for a professional chartered accountant to understand how the things have to be moved. So, you all may be with me saying that the trusts are normally being run professionally also, but at the same time, there are lot of trust which are working in the rural area, on the district level, or the village level, or the taluka level. These trust or the trustees rather, they are all almost from the village and they are honorary. In the village or taluka level or in the rural area, they may not be available a professional expertise on how to deal with the trust. And now the provisions have become so onerous that if you miss something, then either your deduction is gone, your exemption is gone, or you have a lot big size of tax demand. So you are burdened with that amount. And the trust which do not have that means are really baffled how to deal with this. And when you go in the higher hierarchy of litigation, then you find that these trusts do not have the access to such professionals where they can go and provide their case and they can get the benefit of their professional advice because they are in the remote areas or they are in such areas where traveling from them to a place, it is very difficult. The trust registration which has been newly imposed on 1421, you can understand how difficult it is. The audit reports which have been redesigned and now how difficult those are, and the provisions which have been changed considering certain practices and a very on a very low level, I think, but it is affecting 95% of the trust who are actually doing the right things. But nonetheless, because of those 4-5% or 1-2%, all the other trusts are also burdened with so much of dutiful, onerous working that gives them very difficult situation. Friend, I will start by I'll just share my slide which I have prepared. Friends, the trusts are normally under two categories of the income tax provisions. One is section 1023 capital C and the other one is section 11 and 12. When we go through the section 1023C, there are number of clauses 3AB, 3AC, 3AD, 3AE. The second portion is of, there are two segments rather. These four sections are in one part, and the other part is clause 4, clause 5, clause 6, and clause 6A. This demarcation is on the basis of a threshold limit of 5 crore. All trusts having receipts of less than 5 crores are covered under 3AB, 3AC, 3AD, or 3AE, and the others are covered under 4, 5, 6, and 6A. The second regime is 11 and 12 section, where all the other trusts, whoever wants to get the benefit of Income Tax Act, they get themselves covered under section 11 and 12. This is the now the other way we can now for the other bifurcation we can have charitable trusts, religious trusts, or charitable and religious trust, that is a mixture of both. Charitable trust are those where you can claim ETG also, where you have to get registered under section 12A, and proviso to section 215, that is related to trade, commerce, and business activity under the GPU category, is attracted in a case of a charitable trust. Section 115 BBC, that is anonymous donation, is also activated on charitable trust. Second is religious trust, where ATG is not available at all. Section 115 BBC, that is anonymous donation, is also not applicable. And Proviso 215, that is for GPU activities, also the trade, commerce, and business are not applicable to a religious trust. So, religious trust, only religious trust is rather on a very soft side of the provisions. Now, coming to the charitable and religious mixed trust, then ATG is available, but for religious activity, there is a restriction for ATG that it should not exceed 5% of the total income of the previous year. And Section 115 BBC, where there is a mixed charitable trust, is not applicable except where there is a donation, anonymous donation for the purpose of education and medical education or medical hospitals and all. So these are the bifurcations which we can take care of. Now, in the Act, religious purpose I have discussed, but religious purpose is not defined in the Act. So that has to be taken as per the general definition and according to the court's interpretation. The charitable trust includes, earlier it was only 5 items. Now, environmental activities and preservation of monuments, and these are also covered under this charitable object. But the major part is that against the advancement of any other object of general public utility, that is the GPU activity, the trade, commerce, and business is now an issue. And if the activities involve in the nature of trade, commerce, or business, then these are separately treated. And if the income is more than 20%, 20 lakhs in that year, then that is to be not considered a charitable purpose and it will be taxed separately. Coming to this is the general scenario of the trust. Now, the basic thing is registration. First of all, I will take the registration part. From 1/4/21, effective from 1/4/21, registration has been done centralized. As you know, earlier every CCIT charge was having its own registration system, and we were to apply to the charity, this central, chief CIT or the CIT, and he used to allow us the registration either for ATG approval or for registration under 12AA. Now, with the effect from 1/4/21, the whole of the system has been centralized, and now you have a digital number of 16th digit for registration of your trust as a registration number, and the whole of the system is centralized and through the portal. So online system has been developed. You need not go anywhere. You have to apply through the system, and accordingly, registration will be granted. But the other part, starting from this, the other part I'll take later. The new system now provides a mechanism of renewal, regular registration, and so on. First of all, for a new trust, whenever you apply, you will get only a 3-year provisional registration. Then after 3 years or within the 3 years, I'll go to the process later on. You have to apply for a regular registration, and you will get a regular registration for 5 years. In every 5th year, you have to get it renewed. So every 5 years, this has become a duty of all the charitable trust. So come forward and get registrations. So a very difficult proposition for the general trust. A 10-year period has been allowed for the trust which are having receipts of less than 5 crores, and that too in the each of the 2 previous years. So conditions are laid down. So if you are having if your receipts are not more than 5 crores, then, and that too in the last 2 years, so in that case, you will have a period of 10 years for regular registration and renewal. Now, how far this is applicable on the new trust, I don't know. For earlier trust, so according to this provision, a new trust will first get 3 and 5 years, and after the renewal of 5 years registration, he may then get a 10-year period because he will be able to substantiate his 5 crore or less than of 2 previous years within that 5 years. So that will be the position. Or even getting the registration renewed, regularized after 3 years. And if you in the last 2 years, if you can show that there is less than 5 crore, then you can get for 10 years. A common form has been devised for making application, Form 10A and 10B. For this, we may refer to Rule 11AA and 17A. The details are all provided in these rules. But when you see these application forms, so for various status, you have to take care of by way of a section code in form number 10A or form 10B. Provisional registration is granted on an automated basis. So whenever you file a form 10A on the portal, immediately in a day or two, you get a registration provisionally in form 10AC and with a 16-digit unique digital registration number. For various categories of trusts, that is the categories in the sense you are making the application for first time, you are making the application for renewal of the trust, whether you are making the application for regularization of the trust. So for that purpose, there are certain section codes and that clauses or section code has to be mentioned. If you mention a wrong code, so your application may be rejected. Section 12, 12A1 AC provides for registration requirements. On registration, I have certain issues. Rather, I'll go into registration. You can apply for regular registration 6 months from the commencement of your activities. Now, friends, when the Act says 6 months, within 6 months of the commencement of activities. Now, the point is, what is commencement of activities? There is no provision or no definition, rather, in the Act which says when it will be considered as commencement of activities. Whether you received the first donation, it is commencement of activities, or whether you do the activity on the object side, whether then it will be considered to be a starting or commencement of the activities. This will always create a litigation because the department may say when you received the first donation, you started your activity. And if you delay from that date, then your registration may get cancelled or it may be rejected, rather not cancelled. It may be rejected. So here something need to be done that how commencement has to be decided or a fixed tenure of 6 months should be there. The other part is if you do not at all start the activities, then the provisional registration will expire after 3 years. So in the last part of the provisional registration period, that is after 2.5 years. Now, not after 6 months prior to expiry of the provisional registration. That means between 2 to 2.5 years, you have to apply for a regular registration to the to the Commissioner of Income Tax Exemption or Principal Commissioner of Income Tax Exemption, wherever the post is. So here, while making the application in Form 10A, the first line is section code. So here I have to mention under which clause of 12(1) AC you are applying. Clause 1, Clause 2, Clause 3, Clause 4, Clause 5, and Clause 6. Now, six clauses are there under you can which apply for the registration. So, with this various clauses, if you happen to mention a wrong section code over there, because this is a computer system, whatever you have fed into, all these details cannot be amended. And even the commissioner also has not got the powers to change the section code. So ultimately, what the commissioner exemption will do, he will reject your registration, saying that the section code is not proper. You have not applied under the proper section, so your registration cannot be allowed, and it is rejected. Then, what is the next course? Go to appeal the tribunal ITAT, and what happens? The ITAT set aside the case to the commissioner of income tax again back, saying that this is only a mistake, so you change the section code and allow the application or consider the application because it is then proper. But the point is the applications are lying with the commissioner exemption. There is no mechanism with them to change the section code. So it's a very difficult situation how the things has to be dealt into. The issue again is 5 years of renewal. This tenure is so small that it looks like that every now and then you are going to income tax department, filing and registration application, then getting into the details. So the trust or the trustees rather, they get overburdened with the compliances. Already the trustees are already working, barring some professional charitable trusts. But the trusts which are generally being handled across India, and I think major percentage, not even major, the substantial percentage of the trust are those where honorary persons or persons are doing their duty honorarily because they consider this activity to be a service to the society at large. So, being such seva bhavi person, you can say in Hindi, they come forward and take care of the trust. Now, if such harsh compliances or regular compliances will be there, then I have my own doubt whether people will come forward to act as a trustee. My response to this will be no. They will be so afraid of all these compliances and the regulations. They will not come forward to handle, or they will say, we can do the work, but all compliances, all taxation matters that will be handled by another person, and I should not be held responsible for any such lapses. So, this may be the situation. As I said, shortage of staff, the regulations are so complex. I don't know, it is very difficult to the seniors also to understand how far juniors will work. And friends, you will appreciate that for trust matter, normally the trustees find out a chartered accountant who is close to them and not a person who is senior or who is expert in that field. Normally, they try that a chartered accountant who is close to them, nearby, and who can come even at the trust's office and can do the work. So they try to find out such type of chartered accountant who can give them door service. So this is again a problem where our junior friends, if they are not well versed with the tax laws, even the auditing standards and others, then there may be a problem to the trust. So these provisions should be less. They should be means you can say they should be liberalized, and the burden should be reduced so that the small trust having 5 crore or 10 crore or an infinite period should be made available to them so that at least they have a sigh of relief. Applications, I said, uh, under clause 2, 3, 4, 5, 6, because now clause 1 is not required as such, because old trust the period is over. So clause 1 is now redundant as such, and 2, 3, 4, 5, and 6 are only. Now you'll see clause 2 is for renewal, clause 3 is for regularization, clause 4 is some technical inoperative, and then to convert into an operative, there is a clause. And then clause 5 is change in objects. Now, here there is a provision which says that if you modify your objects, then you are supposed to apply afresh to the commissioner exemption and get your objects properly weighted by them and again approved by them. So, to my mind, this is a very difficult task. If your objects are within the parameters of charitable activity or charitable purpose as per section 215, why one has to restrict that if the work which you are doing or the activity which you are doing is not part of your objects, then you may deprived of the register deprived of the deduction, and deduction may not be available. It's a very difficult and harsh provision. Well, when you still being within the provision, within the parameters of section 215, 2 within bracket 15, still, if you it is the objects do not find place in your constitution, then you are not allowed the deduction. So, and if you change those objects, then you have to move forward. Now, again, with the change of objects, in this, I remind of section 12A says about a provision. Let I will take it and later when I'll discuss with the registration part again. You will see that these provisions nowhere say about the new trust. The clause 6, it only says part A, part B. Part A, it says that if the activities has not been commenced and no deduction has been claimed. And in part B, it says section 12AB, just I'll go through it. Where the activities has not been commenced 1 month prior to the commencement of the previous year relevant to the assessment year from which the said registration is sought. It nowhere says that whether it is for the purpose of new trust or whether it is for the purpose of first time registration or what. Simply it says the activities have not commenced and at least 1 month prior to the commencement of the previous year relevant to. So, trust is registered. If your activities have not started, then the year in which you want to take, if say on in September I have got registered, I've registered a trust, and now I have to go for an income tax registration. Then for income tax registration, if my this activity has not commenced, then I have to apply 1 month prior to the year. So during this 6 months period, I don't have a registration. For 1st April 25, 1st April 26, now that will be coming the previous year from 26, I have to apply in February, March 26. So what about the period when the date when I was registered and I have to start the working? I'll get the registration from the next year. So this is an area where straight away with the simple words it can, for a new constituted trust in within this period or within 6 months or within 2 months you have to apply. That could have been a very simple drafting, but now very round drafting or very golmol drafting you can say In the second part, it says commenced and no income or part thereof the trust or institution be excluded from the total income. That means you have started your activity, but you have not filed a return in ITR 7, you have filed a return of AOP, or you have not claimed deduction under Section 1112 or 1023C. Accordingly, this procedure of granting the registration of a new trust has been worded. I really have my own reservation that why not a specific clear provision for new trust or for otherwise. The procedure which we can say you have to, once you have applied in Form 10AB regarding these clauses, then the CIT may call for certain information. Now, as you see in my slide, call for such documents or information from the trust or institution to make such inquiries as he thinks necessary in order to satisfy himself about the genuineness of activities of the trust or institution, one part. Second part, the compliance of such requirement of any other law for the time being in force to reduce this screen. Right. The compliance of such requirements of any other law for the time being in force by the trust or institution as are material for the purpose of achieving its objects. Now, it's a very difficult provision. If, friends, you have gone through this, now the income tax department says that first you get yourself registered as per the local laws. Till you don't obtain that registration, you will not be allowed registration under the Income Tax Act. So, first of all, if one plans to form a charitable trust, he has to first see what are the provisions where he can get the constitution registered. So, in case of a Section 8 company now, you have to go to the Companies Act, fine, get the company registered, no issue. It's a centralized process, everything is fine tuned, so everything is fine. Now, according to the local laws, every state has its local law of charity, donations, or such. So, I being in Gujarat, there is a Gujarat Public Charitable Trust Act. Under that provision, you have to file, you have to prepare the trust deed and then you have to file it. The system and working of the charity commissioner's office is so difficult that to obtain a registration of a trust from that particular office is again a 1 year job or a 6 month job. Now, once you start, you want to start a charitable trust, you want to get the registration under the Income Tax Act also. Why this unnecessary provision of getting it registered with the Charity Act or with the charitable local provisions has been made compulsory? No doubt, it may be made optional or it may be a requirement, but not an compulsory requirement for obtaining registration under Section 12A. It has been very specifically mentioned, and if you don't have a registration under Charity Act, your registration under 12A is not allowed. Your application rejected. So this provision is very difficult, and that is why I said that local laws becomes a difficult activity for anyone to get into. After certifying himself about the objects of the trust or institution, the genuineness of its activity under item A and compliance of the requirement under item B of subclause 1, that is A and B that is mentioned above this particular clause, pass an order in writing registration, and if not so satisfied, he may reject or now here with this rejection, or if he doesn't want to register the trust, two things have been done. One is that it is rejected. With the rejection, he also says, that is the commissioner exemption says, that your provisional registration is also cancelled. Now, a person for 3 years, he has done certain activities that is charitable within the parameters of the act. Now, if his registration is cancelled, the provisional registration is also cancelled from the day one, then how he is going to survive under the taxation laws? So this is a big question that has to be addressed. That cancellation or this regular rejection can be prospective, but whatever action has been taken in the last period, for that at least the registration should be available, and let the assessing officer take its own action. And the section is worded such a way. You will see 12AB4. This is 12AB4, where registration or provisional registration of a trust, where registration or provisional registration of a trust or an institution has been granted under clause A or clause B or C of subsection 1 or clause B of subsection 1, as the case may be, and subsequently the principal commissioner, subsequently, the word is subsequently. That means this provision of 12AB within bracket 4 applies once a registration has been granted. But what happens? The charity commissioner exemption, the commissioner of income tax exemption applies this at the time of the first registration of regularization. Under clause 2, when we go for regularization after 3 years of the provisional registration, the CIT exemption takes care of all these items, though they are not applicable to my mind. The principal commissioner or commissioner has noticed occurrence of one or more specified violations during any previous year, or the principal commissioner or commissioner has received a reference from the AO under the second proviso to subsection 3, or for any previous year. This is different. That is to be done at the time of assessment. Such case has been selected in accordance with the risk management. This is again a scrutiny. Then you come to the provision. Now, with these three items, the principal commissioner has noticed occurrence of one or more specified violations during the previous year, and the principal commissioner has a reference from AO, and it is selected for scrutiny. Under these three items, the principal or the commissioner may call for such documents or information from the trust institution. Now, pass an order in writing cancelling the registration. It doesn't say about rejection here. Pass an order in writing cancelling the registration of such trust or institution after affording a reasonable opportunity for such previous year and all subsequent previous years if is satisfied and one or more specified violations has taken place. So this is there. Now, third part is pass an order in writing refusing to cancel. This is he may say that no, this is not a point, and forward the copy. So the point mainly is the reject at the time of rejecting a registration for the first time, it should not be considered part of 12AB4. The 12AB4 should not be considered. But nowadays, all the commissioner exemptions are taking care of this 12AB4, and they are accordingly rejecting the registration applied in Form 10AB for the purpose of regularization of the registration after provisional registration. Now, what are these specified violations? Where any income derived from property held under the trust wholly or in part of charitable or religious purposes has been applied other than the objects of the trust or institution. Now, here that again, what I was telling earlier also, that objects as per constitution and objects in terms of the Income Tax Act, they have tried to make a gap in between. If you are well within the provisions of charitable purposes as defined under section 2 within bracket 15, then why should it be considered as a violation? It should not be considered as violation. Then second part is the trust or institution has income from profits and gains of business, which is not incidental to the attainment of its objects and separate books are, this is violation. Then third part is the institution or trust has applied any part of income from the property held under for a private religious purposes. Again, that is okay. The trust or establishment of charitable created or established for the community has applied any part for the benefit of any particular religious community or caste. Now, if the commissioner exemption during the registration of the trust for regularization under clause 2, he says that your objects are for particular religious community or caste. So it is a specified violation and accordingly you will not get the registration. Friends, when you read this particular provision, it says has applied any parts of income for the benefit of particular religious community or caste. So till you don't apply to it, you are not supposed to reject. The commissioner of exemption has to see whether you have really applied for the purpose of a community, though there may be an object. But if you have not applied, then it is not a specified violation. And if that is not a specified violation, then for the registration, he need not take action. But they are being taken. The activity again, E part, any activity being carried out by the trust or issue is not genuine or is not being carried out in accordance with all or any of the conditions subject to which it was registered, fine. The trust or issue has not complied with the requirements of any other law. Now, what I was saying, the trust or institution has not complied with the requirement of any other law as referred to in item B of subsection subclause 1 of clause B of subsection 1, and the order, direction, or decree by whatever name called holding that such non-compliance has occurred has either not been disputed or has attained finality. Now, if I don't get a registration under Charity Act or the local act, then again it will be considered to be a specified violation, and under 12AB within bracket 4, you will be considered that there is a specified violation and you will not get the registration or registration will be rejected. The application referred to in clause AC is not complete or it contains false or incorrect information. Now, is not complete was a hurdle that has been removed from the act now, and only the point is it contains false or incorrect information. So, to this extent, they are considered to be specified violation, and accordingly, that may result into cancellation of your registration. The order under clause as may be shall be passed before expiry of a period of 6 months calculated from the end of the quarter in which the first notice is issued by the principal. This is a timeline period, so there is no issue into it. Now, issues under this project I have discussed while I was discussing the provisions. Object of the trust is a big issue. Application of income for other than the object specified violation liable for cancellation. Then religious community again, I would say religious community is not defined under the Act. When it is not defined under the Act, then you have to rely on the various court rulings. And friends, the court rulings are so subjective that it you cannot come to a definite conclusion. Daudi Bora, Rana Trust from Ahmedabad Tribunal, Daudi Bora from Supreme Court, and many other decisions that says somewhere they have said that it is a charitable trust, which is which is also a religious trust, whereas in certain cases it says that it is meant for a specific community, so it has to be disallowed or the application has to be rejected. So this is a very difficult provision. One has to take care and be very clear that there is no object which says that what is a religious community. Being applied when first regular registration is being processed. So this is again this 12AB4 is being applied when the first regular registration being processed, which is wrong in my mind. It should not be applied. And the requirement of other law, the state charity or society laws or Indian Companies Act, these all has to be complied with. Otherwise, your rejection will be there. Now I come to the provisions of section 11 and 12, which is the deduction part of section 11 and 12. Of the total income, a minimum of 85% is required to be applied and not in excess of 50% can be accumulated. This is section 11.1a. There are four provisions: 11.1a, 11ab, 11.1c, and 11.1d. For this application of income, both revenue and capital expenditure are considered as application of income. Now, we have a rider for at least depreciation. So once you claim the capital expenditure 100% as an application of income, then depreciation will not be allowed to you as a regular expenditure in the future years, that is the year after when you have claimed the capital expenditure. So that you will not be allowed. Earlier, depreciation was also being allowed, so there was a double deduction of the same amount. So now this has been done away with, and now depreciation is not allowed. If you don't claim 100%, then you can continue with the deduction of depreciation, and accordingly you can carry out. Income from property held for religious and charitable purposes. This is 11.1. 11.1 and then 11.1b. If a trust created before the commencement of this act, then certain benefit of the even you can use it for a specific community or a religious community. There is no issue. In clause C, it is for application outside India. In case of corpus donation, clause D, if there is a corpus donation and it is deposited under the modes and forms which are specified under 11.5, then you will get the benefit of it. If the income falls short of 85%, then you can file a form number a form number 10A, and accordingly, form 10 you can file, and you can get the benefit of accumulating it for further 5 years. Then, if the income is not received during the year or by end of the year, then also you can file you can claim the application in the next assessment year when the income is received. And for carry forward, you can file a form 9A and accordingly take benefit. Section 40A3 under the business and profits and gains of business, and 40A1A regarding TDS non-compliance. These both provisions have now been applied to the trust. So any trust making any expenditure on objects of the trust has to be by check only, and if it is in cash, then it shall be less than 10,000 per day to per person. And accordingly, TDS provisions have to be taken care of. If you don't take care of the TDS provisions, then they are not considered to be application. So I have to be a bit faster. In case of these applications, I will just go without going with the slide. I will just take care that if any trust is giving a donation to a corpus of another trust, then that is also not allowed as an application of income. So from corpus to corpus, no issue. But from regular funds, that is the income during the year, if you give it to the other trust in the corpus, then that is not allowable. So in the generally the remote area trust, they don't understand what is a corpus fund and what is all this. So there is a problem with them, and they get the difficulty while assessments are taken care of. Even now, if your application to the income is given to a trust, suppose you are giving a school fee of a student, that is given to a trust, because normally schools are run under the trust. So giving donation to a trust, you will only get 85% of that. 15% is cut. For some reasons, this provision has come. Capital 139. If it is applied for means if your income falls less than 85%, 15% you can accumulate. But if it is less than 85%, say you have applied 70% only. So to the extent of that remaining 15%, you can accumulate it for 5 years by filing Form 10, and accordingly you can take a benefit of accumulation for 5 years, and that it can be covered. Even an excess of expenditure is not allowable as a deduction as earlier it was done. And if your expense is excess, then that means it is not out of your regular income, but it is out of some other funds, that is corpus fund or otherwise. So it is indirectly said that if you make any expenditure out of corpus fund, then you don't get the deduction. However, to compensate this, it has been said that if within 5 years you recoup the corpus fund, and if you built up what earlier you have taken away, if you replenish it, then you can claim that benefit within 5 years in the next coming periods. So accordingly, same provision is for loan funds. If you take a loan, make expenditure, that expenditure is not allowable as application. Whenever you return the loan, you can claim it as an expenditure. So these are certain provisions which are very much required. Normally in the small areas, people take loan and make the expenditure, and otherwise they are put into trouble because that expenditure is not an allowable expenditure. You can accumulate under 11.2 for 5 years, and there has to be a specific provision for it. You have to mention it for what purpose you want to accumulate this. You cannot do any business under the trust. The business has to be incidental to your, say, in case of a school, you can print books, you can print notebooks for the purpose of the student or like things that will be incidental to your main objectives. So accordingly, you can do that, but otherwise not. Section 11.5 says about investment, modes of investment. That is how you have to make the investment. The depreciation is not an allowable expenditure, that is given in 11.6. So, so accordingly, these are the things, issues we have already, these actual. Acha. Now, one very important point is that payment has to be actual. So on mercantile basis, you cannot claim the expenditure from the application of income. So you have to make it application this, and in the ITR, it is provided what is the opening balance of creditors, how much new creditors have been generated, and what is the payment made to the creditors and what is the balance. So whatever you have made the payment is allowable as an expenditure or as an application, otherwise not. So this you have to be very careful. So for getting the deductions on 11 and 12, you have to make the application, you have to obtain the registration. The person in receipt bank has made an application for registration, and subsequently, if there is any modification in the objects, then again you have to file it, and then till you don't file it, then you will not be allowed this benefit deduction under 11 and 12. 12A1 AC, as I said now, A1, 2, 3, 4, 5, 6, this is the registration provision. Condonation of delay is now provided, that if you make an application and if there is a delay, and if you explain the delay, then it will be considered to be filed in time, and with the reasonable cause, you have to explain it. Now, there is a very heavy requirement of books of accounts. If you have not maintained proper books of accounts, then also you may be devoid, or you may be debarred from claiming any deduction, and the accounts are to be audited, and the date of audit is linked with the 44 AB date. So whatever timing now in this year, it is 30th September. So before 30th September, you have to get it audited. But these audits, again, there are two other forms which I discussed earlier. But the timeliness of those forms is very onerous. Before 2 months of the return of filing. So return filing is by 31st October. So say by 31st August, you have to file Form 10 for the purpose of accumulation under Section 10.2 or Form 9A for the income which is used in the next year and not received in this year. So these two are very onerous procedures. And nowadays, the department is very harsh that if you don't file the form in time, then they will deny all the deductions. Though courts have said that these are filing times are not mandatory, they are directory. So even before the assessment, if these can be filed, then you will get the benefit. But you have to go for litigation, only then you get the benefit, otherwise not the benefit. Now there is a clause for merger also. Earlier, there was no such provision, but now it has been provided that the two trusts can merge themselves and an income tax will recognize. But no rules and nothing has come up as on date. Maybe in the new act, there is something. Then 13 section is very important. It says that section 11 will not apply in certain cases, that is provided under section 13.1. And various but 2-3 part are very important in this. Any part of income from the property held under a trust for private religious purpose which do not endure to the benefit of the public. This is one. Then in the case of trust, as it is this. If the trust is created or established for the benefit of any particular religious community or caste. Now, this is a provision where section 13 says that if this is there, then 11 and 12 will not be allowed. So particular religious and community, now you friends, you will appreciate that all the trusts are normally being developed by some particular community or some particular leaders of the community for the benefit of public at large, but there is somewhat their community is also taking benefit of it. So there are a lot of litigation that may arise or practicality in these provisions. So government should, I think, come up that what is this community, or some portion should be allowed. That if you provide benefit to your community 50%, 20%, or 30%, then there won't be any disallowance or of non deduction, or there will be non-deduction case, not be the non-deduction cases, but there has to be some provision by which some percentage of application can be allowed for a particular community or a particular group, but that is not there as on date, so you have to take care of it. If you don't invest according to the 11.5, then also you may be deprived of deduction under section 11 and 12. And so shares of companies, even if you get into gift, after a certain period, you have to convert it into particular cash or liquid asset for 11.5 forms. Otherwise, you may be deprived of the deduction. Then these are all related to shares. For business, if there is an incidental business, then you have to then you have to prepare and keep separate books of accounts. And if you don't maintain separate books of account, then the benefit of deduction will not be available. If any amount is paid by of salary, allowance, or otherwise during the previous year to a person referred to in subsection 3, that is to specified trustees or specified persons, if you pay something which is not natural or which is not according to the general norms, if it is not at arm's length price, you can say, then in excess amount which have been paid will be disallowed. It will not be considered as application, though the whole deduction will not go, but that much of portion will not be considered. Accordingly, if you purchase any property from a person who is a specified person or trustee, or if you sell a property, then if the prices are not according to the guideline rate or the stamp duty rates, then also there may be a disallowance or the registration of the trust may be cancelled. However, in case of a medical institution or an education institution, if the family members of the trustee are studying and the regular fees or regular charges are being taken, then it will not be considered to be a benefit to a trustee, and accordingly that benefit will not go away. Now, one more provision that is a beneficial provision, that if for any reasons, if your registration is not considered and if you are considered as unregistered trust, then the provisions provide that at least the expenses of the objects will be allowed as an expense. Only the net income will be considered for the purpose of taxation and not the whole of the receipt. Whereas nowadays, normally whole of the receipt is being then in appeal only you can get the benefit. For the purpose of scheduled caste, backward class, scheduled tribes, or women and children shall not be deemed to be a trust benefit of a religious community or caste within the meaning of clause B of subsection 1. So, if your trust is for the purpose of women only, for the purpose of children only, or a backward class, or a scheduled tribe, or a scheduled caste, then it will not be considered as a particular religious community or caste, and benefits will be allowed. That you can take care. These are all substantial interest provisions. Now, coming to the audit report, Form 10B and 10BB, the audit reports are there. 10B is for the purpose of the regular trust, and 10BB is for trust having less than 5 crore receipts. So in 10BB, there is no big issue, but in 10B, friends, you will agree that earlier the audit report was one pager and now it is 15-20 pages. All details of how the income has been collected, how the application has been done, that has to be all reconciled and properly fed into the columns and rows of that particular report. If you fail to do that, there will be a problem. Books of accounts under Rule 17AA, you have to detail what books of accounts have been maintained and proper details have to be submitted. If you don't mention that, there will be a problem. And all the details of the non compliance or violation of the provisions are covered in the audit report. So you will see there is a provision, any modification done to the object of the trust, you have to mention. Details of movable property sold to a specified person, details of property diverted during the year, details of project run by the auditee, whether they were in nature of trade, commerce, or business. So you have to give. So it's a very onerous duty on the chartered accountant to type this, to file this report or to prepare this report. And one more thing, which is now from the, I think it is from the institute side only, that a person who is peer reviewed can only audit the charitable trust because it involves public fund. So normal chartered accountants cannot do the audit till they are peer reviewed. So this may activate the compliance of peer review, may be possible, but some time should be allowed, or a threshold in terms of the Income Tax Act where the 5 crore limit is there. Trust which are less than 5 crore receipt may be allowed to be audited by even a non-peer reviewed this chartered accountant. So this may help the other person, the small chartered accountant, the small trust, both way. So all these details in the audit report have to be this, and matching of audit report with ITR. Each and every item which has been provided in the audit report has to be matched with the ITR. So if I go into detail, I think 1.5 hour or 1 hour 15 minutes will be very less for me. All these schedule LB, schedule VC, voluntary contribution, schedule A, application of amount, these all have to be reconciled audit report as well as this. In earlier years for 17, 18, 18, 19, all earlier years, there were some delays. In this delay, there is a circular which says that up to 365, the delay has to be condoned by the commissioner or principal commissioner. If it is more than 365, but up to 3 years, then it has to be condoned by the principal commissioner of income tax exemption, which is sitting at Delhi. The basic condition which here I would like to emphasize is that you can only apply for condonation within 3 years from the end of the assessment year for which you are applying. So if your some delay was there in assessment year 1920, so the time is gone. Now it is 26. So for only assessment year 22-23, you can apply for condonation up to March 26. Before 22-23, all condonations cannot be applied. So this is a very otherwise a harsh, but definitely 3 years is a good time. Certain items like accreted income under section 115 TD, anonymous donation under section 115 BBC, and again one more new section 115 BBI, that is for taxability of specified income. So these items are also very difficult. Accredited income is more so because now the provisions of 115 TD Why this provision has come? Because the Tata Trust, you may recall the case of Tata Trust before the tribunal in Bombay and High Court in Bombay. They withdrew their registration under 12AA or A, and they started filing return as a normal AOP. That gave some sunlight or some light in the minds of the department. And now it says that if a trust closes or it converts into a non trust, then whatever assets they were having, net assets, on that you have to pay tax as per MMR. And that not only on book value, but on the market rate. There are some deductions, some liberties are given, but the basic point is now on that effect, the extra effect that has been made is that if a registration is cancelled or it is rejected, then it will be considered to be a trust converted into a non-trust, and accordingly it will be deemed to be a non-converted converted trust, and all the provisions of 115 TD will apply. Friends, you will see that once a registration is either rejected or cancelled, the trust will not sit idle. It will go for somewhere in appeal with the higher forum. That will take its own time. What will happen? The old law, that is the law, present law does not provide anything. In the new law, I found that something for appeal purposes has been given, but nothing otherwise is given. Plus, one more thing, I could not find any provision under this 115 TD as to who is going to monitor these provisions. It is not part of total income. It is an additional income tax like the DDT or otherwise, which has to be paid upfront in 15 days after the conversion of the trust. And there is no provision for any statement filing, any return filing, any details, any sort of information to be filed before the department. There is no provision in these 115 TD saying that who will monitor and how these taxation or this additional income tax will be collected. I have found in one of my case where the assessing officer himself says that since your registration is cancelled by the CIT exemption, so now you are liable for 115 TD, liable under the provisions of 115 TD. And accordingly, he himself have calculated without asking the trust that what is the market value or whatever it is, he has done it and he has assessed the tax as a total income. Whereas, to my mind, this income is not part of your total income. So I don't know how the things will move under the new section. Also, the monitoring provision is not there, though appeal and all that has been provided, but nothing is there. So this has to be. I think institute should also take care, take some look into this provision whether I am correct or not, because not much of litigation has come forward and there are no case laws otherwise, and no detailed literature or articles are available. No detailed commentary is also available on this particular accredited income, but how is to be monitored is a issue which crop up in my mind. Anonymous donation can be taken care of 115 BBC. In case of charitable trust, if you get anonymous donation, it is taxable at the rate of 30%. Anonymous the donation has been defined where you don't have a name and address of the particular person, and other uh, items as may be prescribed. That as may be prescribed is still not prescribed. So at least for accepting any donation, you should have the name and address of that particular person, and if possible, the Aadhaar number or PAN number of that person, so that he can be identified. So this way, anonymous donation for charitable purpose, there is an issue. For religious purposes, trust, wholly religious purposes, there is no issue because anonymous donation does not apply. And for a mixed trust, if there is some religious and charitable both, then also it does not apply except for donation received with the direction of education or hospitals or medical line. That in that case, it will be taxable as anonymous donation. Now, taxability of specified income, this is a new provision 115 BBI. Here it says even the 15% accumulation, that is a free accumulation. Suppose you have an income on 1,50,000 or 2 lakhs. You have only applied small amount of this. Earlier, what happened? In case of the tax rate of AOP, the regular slab rate was allowable. But according to the provisions, according to the wordings of the section, nothing is allowed. But there has been a circular and at least slab rate benefit is allowed. So up to 2,50,000 or 3 lakhs, the trust having income, small income, they are not taxable. But considering these 115 BBI provisions, there is. But according to the circular, it is not allowed. Books of accounts, you have to keep proper books of accounts. And if you don't maintain, then you are liable to all penalties. Return if you don't file in time, if you don't upload the audit report in time, the deductions are gone. So be very clear, be very vigilant to see that your returns are filed in time. Your reports, audit reports in 10B or 10BB, wherever it is applicable, is properly uploaded, because in uploading the audit report, again, like tax audit report, first of all, you have to upload the report and then CA has to approve it, and then accordingly it is the final. Sometimes happens one step is done and the second step is not done. Then also you are in a trouble. So you should take care of that. Now, there were lot many decisions which said that filing and the timeline. Filing is mandatory, but the timeline is not mandatory, it is directory. So even before the assessment, if you file the audit report or you provide the audit report, then benefit was given. But till that time, they were all part of the rules. Now in the statute, they have directly provided, the act has directly provided that before due date, if you don't file, then you will not get the benefit. So it is very difficult now, considering the decision of Wipro Limited, considering by Supreme Court, Honorable Supreme Court, which it says that in the context of provision of Section 10A, it has said that filing of certain documents are also mandatory, and the timeline is also mandatory, and filing also mandatory. So both way the things have taken. So earlier decision of Honorable Supreme Court itself in GM Knitting Industries indirectly has been distinguished, not overruled as such, but distinguished, that there was some different this area of working, and here it is something different. So here it is mandatory. So these things may come to the loss of the charitable trust. So this should be considered. And there are number of things which I have to take fast also, or maybe that I have not been able to discuss also, because the time is very short and it takes for discussing the whole of the provisions, it really takes lot amount of time. So friends, I hope I have tried to cover the things in a proper way, and you may have been at least have a cursory look or have an idea about how the trust things are going on. So now over to the.
Thank you so much, sir, for such an enriching session. Now we'll take up questions from the audience one by one. First question is from Bharat Kumar Ji Jain. Can a ATG and 12A registered trust give loans and advances of surplus funds at interest to its trustees or their families instead of depositing in FD account, which usually get a lower interest rate?
Friends, it is very clear under section 13 that no benefit can be given even at an interest rate. So 13(1)(d) is the provision which clearly says that you cannot give such loans and advance to private persons. So you have to only put it in FDRs or the approved funds only.
Right, sir. Now, question from K. Shriramji. Is the differentiation between capital fund and corpus fund is mandatory? It is the first question from them.
Sir, corpus fund and capital fund are one and the same thing. I think there is no issue. There is no difference between corpus or capital fund. Capital funds are not revenue funds. They may be for different purposes, or it may be considered to be an earmarked funds. So, accordingly, to my mind, both of the funds are at the equal footing.
Regarding anonymous donations, they have some entries in the bank passbook with some truncated names. They are unable to trace the donor full name or address or other reference. Will it still be treated as anonymous donation?
Yes, when it is deposited, this question means that the deposit is made directly in the bank account. But
Right.
till you don't have that, according to the section, it will be treated as anonymous only, because you cannot provide the name and address which is there in the statute itself. So that will be difficult for the trust to claim the benefit of normal provisions, and it will be considered as anonymous donation.
Another question from the Ganeshan Anadiji. Trust is newly formed as public charitable trust by registered trust date with sub-register office. All trust became defunct due to date of trustees and others exited. Whether carryovering of bank balance from old trust to new trust taxable?
Friends, as I said, old trust has to be dissolved and the funds has to be transferred to the like objects trust. Then it can be considered. But if it is not so, then it will be considered, the old trust will be considered to be an converted trust or a dissolved trust, and accordingly the section 115D provisions will apply. So you have to properly pass a resolution saying that since the trustees have expired or they are no more, so we are dissolving this trust and the funds are being transferred to a like object trust, then you can get the benefit. Otherwise, not.
Okay. Next question from Govind Dongreji. While filing the renewal application, if the year or any other field is put incorrectly, can we revise the application? Alternatively, any corrective steps to be followed? For example, applicable year is put wrongly. Instead of assessment year 26-27, selected as assessment year 25-26. So it is about the changing the fields which are put incorrectly, rectifying the same.
While giving reply to the commissioner exemption, you may say that this year is wrongly mentioned, and if that wrong mentioning is properly justified through the documents also, if it's a newly trust, so definitely if it was registered today, you cannot say ask for 25, 26 or 23, 24 or 24, 25. So accordingly, these type of things are, I think, correctable and rectifiable. But revision of any application is not possible, because there is no provision, or in the portal also there is no such facility provided where you can revise, you can file a fresh application, but you cannot revise anything. And for filing fresh application, it will take effect from the day when you file. So the earlier application will go away. One should try for correcting it. If the of a commissioner income tax commissioner exemption is not correcting it, then you can go for appeal. The tribunal will definitely give you a benefit in this.
Another question from Krishna Veniji. Religious society filed Form 10A on 31st March 22 and was granted provisional registration for 3 years, valid up to 31st March 25. As per the norms, Form 10AB should have been filed before 30th September 24 to convert provisional to regular registration, but the society has not filed it. In this case, will the society still be eligible to claim income tax exemption for assessment year 25-26? Because form was for 3 years. 10A form was filed.
Up to 31/3/25, that is financial year 24/25, you are having a registration that is valid. You have not filed 10AB, so there is no cancellation or rejection of it as such. So up to 25, there is no issue because there is no order of rejection or cancellation in your case. But if you don't file further, definitely suo moto CIT exemption may come forward, or the assessing officer may write to him for cancelling or rejecting your registration.
Next question from Bhavesh Chittodaji. He wants to know about the treatment of grants received by Section 8 microfinance companies who provides loans to people of backward area and people below poverty line. How would the grants be treated and how it should be shown as utilized or applied for deduction under income tax? They are having Section 8 company.
Whatever grant you are receiving, that will be considered to be an revenue income from for the purpose of the from the point of view of the trust, and whatever expenses on the basis of grant is done, that grant accordingly normal income and normal expenses that has to be considered. Now if the grant is for some specific item of expenditure, there may be grant that is a general grant, or like in schools which are government granted schools, the salary is being paid by the government, so you can take care of that. The same salary which I have received as a grant, I have paid to the teachers. So accordingly, you can set off that also, neither claiming the expense, neither claiming the income. But otherwise, whatever grant you are receiving, that you have to credit to your income expenditure account as an income, and whatever expenditure you have made as an application, that you have to consider as application separately.
Next
But
question from Narayan Murthy.
if you are substantially financed by the government, then you can take, if your total receipt is less than 5 crore, you can take benefit of section, in case of education, 10(3) AD. In case of hospitals, you can take benefit of 10(3) AC.
Next question from Narayan Murthy Vaidyanathanji. Would addition of new objects to the existing objects tantamount to change in objects? Would the trust be required to apply to CIT exemption for registration afresh?
Yes, definitely. Change modification in object means addition also, deletion also. That has to be taken care of.
Next question from Nachiketa Travakalji. I think it's the ATG registration got expired on 31st March 25. Trust has not yet renewed the registration. What needs to be done?
You can apply for that. Is the only point is whenever you apply, you will get from that date. In between period, if you have any donation, that will not be allowed for ATG. There is no way out because the condonation of delay is only provided under section 12A. But for ATG, there is no such condonation of delay.
Next question from Nitin Bangarji. A trust engaged in educational activities working since last more than 10 years but not registered under section 12A. What are the options available with the trust? What will be the status of form 10B?
10AB. 10B means audit report. 10B is audit report. 10AB is application form.
They want to know about the 10B.
Hiteji, this is a education trust, no? What you said?
Yes. Yes, educational society.
Education trust, you can take benefit of 1023C3AD, clause 3AD, where if your receipts are less than 5 crore, then you need not get a registration under 12A also. Till date, the provisions. So you can straight away get the benefit of 1023C3AD without registration under 12A. And if you want an ATG deduction, then definitely 12A registration or 12AA registration is required. But for claiming 1023C3AD for an education institution having sole object, one thing is very important, it should be a sole object for that educational institution. There should not be any other objects in the constitution of the trust. Because now, earlier, the high courts were saying that even the mixed objects, but if you are doing a project which is solely for education purpose, no issue. But Supreme Court, in the decision of New Nobel, has very clearly said solely means sole. There should not be any other object in the constitution. So that one has to take care.
Okay. Next question from Manilji Jain. It is about the renewal of registration. Should be filed on or before 6 months of expiry of registration. 5-year period is valid up to assessment year 26-27. Hence, we need to file Form 10A for assessment year 27-28 for 5 years. But still portal not showing assessment year 27-28. What to do?
If you have to file within 6 months a renewal application, which is available on the portal. I have not gone through the portal, but I find 30th September 25 is the last date for filing renewal. In case of 5 years registration given for the old trust, it is directly given. For the new trust, it is given by filing Form 10AB, which expires on March 26 as such. Assessment year 26-27. So financial year 25-26. So your registration expires March 26. 6 months prior to it means by September 25, you have to apply for it. So then automatically you will get for 27-28. Need not apply separately for 27-28.
Next question again from the Nitin Mangreji. There is a delay in submission of Form 10B, which have been filed belatedly. The delay is more than 4 to 5 years. What are the options before the trust if the condonation of delay application is rejected by CIT exemption?
So in case the delay is more than 365 days or even more than 3 years, you have to go with the CBDT, and if CBDT or they have rejected the condonation, then you have to go to High Court for asking for condonation. The only option then left is High Court.
Next question from Aniruddha Shenvaiji. In case of trust received donation in kind, will it be taxed as other income in the year of receipt? If in subsequent year the trust sells the same land and applied the consideration for charitable purposes as per object of trust, will there be any tax liability?
If it is applied for, if you have received something in kind, which is a donation, it is not an immobile property. It's a mobile property used for the purpose of, like, say, in an hostel, if somebody is coming and giving fruits or giving some food, then that is being consumed by the students upfront. So there cannot be anything otherwise. But if it is an immobile property received in donation, that is in kind, then you have to consider the rate according to the fair market value, and accordingly you have to record in the books of account. If for general purpose, if revenue purpose something is received, there is no issue.
Sir, another question from Manurag Agrawal. New format for financial statement on NPO or trust mandatory for financial 24-25. So is it mandatory or optional? How to bifurcate between restricted?
Financial year 24. Anurag sir ko bulana. Anurag sir ko. I'll just reply within 2 minutes. Next question is
Yes, yes, next. Next question is from Ashok Sancheti. Our trust has 12 certificate from assessment year 22-23 to assessment year 26-27. So I want to ask the while going for renewal in Form 10AB, which assessment year is to be selected? Whether to select assessment year 26-27 or assessment year 27-28?
Now, since 26-27 already you have applied, you have already been granted the registration. So now, for the purpose of new, you have to say 27-28. There is no issue, but 10AB, which is for the purpose of clause 2, that is the renewal, and clause 3 is for renewal, clause 2 is for renewal, clause 2, clause 3 is for regularization. Uh, so for clause 2, automatically the assessment year will be considered as 27-28, or even if you file 26-27, there is no issue because the registration was already there and it will be allowed from 27-28. That audit, what you were telling, then please repeat that question. The earlier question.
Yes.
Mandatory audit.
New format of financial statement on NPO or trust. Is it mandatory for financial year 24-25 or optional? And how to bifurcate between restricted items they have told.
Here there is one point. The local act will prevail upon the mandatory requirement of the ICI. So if the local act provides some particular format, then that has to be taken care of.
Okay. Next question from Pense Dilip ji. In case of charitable trust, which have received permanent registration ATG earlier, now has to apply for does it require to apply for re-registration? In case if application for re-registration is not done till date, please guide remedy. Can such charitable trust apply now by applying and filling form 12AB? Please guide in case of registration is not done, whether amount not spent. It may be less than 15% of income and taxable under Income Tax Act.
Hitesh, please repeat this. I could not get it properly.
Yes. In case of charitable trust, which is already got a permanent registration under Section 80G earlier, now does it need to apply for re-registration? In case,
I will first reply this. There is nothing like re-registration. There has to be a renewal.
Yes.
So you can apply for renewal. There is no issue.
Okay. And in case if application for renewal is not done till today, please guide remedy. Can such charitable trust apply now by applying and filling form 12AB?
If you have not applied, so you can apply today for ATG. And from today, you will get the ATG approval effective. In between, you will lose that ATG benefit or approval.
Another question from Bhavesh Chittoda. If trust have foreign contribution last year, but not in current financial year, then which form to be filed if unutilized foreign contribution is remaining?
Form 10B. Form 10B has to be filed in case this 5 crore limit will not apply. If you are receiving foreign funds, then audit report in Form 10B has to be filed.
Okay. And even if it is unutilized, then Form 10B it should be.
Means the audit report will not be in 10BB, it has to be in 10B.
Okay. Whether donation in kind need to be included in Form 10BD? If yes, then any impact on 10BB?
No, 10BD is only for the purpose of donations received for which you have allowed ATG receipts. In case of kind, there is no ATG receipt, I think, to be allowed for the food items or like that. So there is no question of filing 10BD in that case.
Right. Trust which has ATG registration has taken donation exceeding rupees 2000 in cash. The trust has donor-wise details, but it has not filed Form 10BD. Whether the trust need to compulsory file Form 10BD when donor is not concerned about ATG benefits or deduction?
No, not required. 10BD, as I said, only required when the donor is claiming ATG. So for linking that ATG in the ITR and proper deduction is given or a proper claim has been made by the donor, only for that purpose 10BD is effective. Otherwise, you don't require it.
Right. Next question from Rahul Jaju. Whether basic exemption limit available for taxability of anonymous donation if trust total income is below basic exemption limit?
For anonymous donation, you have to pay the full 30% tax. There is no basic limit. In case of specified violation under 115 BBI, there is a availability of basic exemption.
Next question from Vijay Kumar ji. For a trust who fall under GPU during the stage of registration under Section 12AB, should the CIT exemption see the proviso to Section 2 subsection 15 at the stage of registration or during assessment proceedings?
At this stage of registration, definitely he has to see because if no activity has been commenced, there is no issue. He cannot say that your objects are for trade or commerce or your application is for trade or commerce. But if you already some 1 or 2 years have passed, say 3 years is a provisional registration. By end of third year, you have to apply for the regularization of that registration. So if in those 3 years, if you have done trade and commerce activity, then definitely he may reject your application.
Next question from Rohit Sharma ji. In case the trust lost its old manual registration certificate, whether the registration under new process in 2021 can be considered as invalid by CIT exemption.
So in case of old registrations, even you don't have the certificate, you can definitely apply for the permanent registration and you might have applied already. Now today it is not available, but under clause 1, if you have applied and you can get it 5 years because it is an automated process, you can get the 5 years. But now after 5 years, when you go for renewal, then there is no need of the old registration.
Can trustees receive salary from trust? Salary or any honorarium or remuneration?
Trustees can definitely receive salary from the trust, but it has to be within the reasonable limits and at par with the other employees of the trust. If it is excess, then it will be disallowed under Section 13.
Another question from Srinivas Raoji. Can corpus fund used for revenue expenditure because some trusts do not want to buy assets? It's a earmarked one.
Veteji, please repeat it.
Can corpus fund used for revenue expenditure because some trusts do not want to buy assets? If any trust don't want to
There is
invest into
no
capital.
issue at all in using or utilizing the corpus fund for the purpose of revenue expenditure. The only point is that will result into a loss in the income expenditure account. So you won't get the loss as such. As and when in the coming years you replenish up to 5 years, if you replenish the corpus fund by the donations, then you can get the benefit in that year under the application of regular provisions. Otherwise, no issue.
Sir, is there any strict timeline for spending corpus fund collected by trust?
No, there is no strict timeline, nothing. But corpus fund has to be remained deposited in any form under Section 11.5. Whatever deposit has to be there as provided in Section 11 within bracket 5.
Okay. Sir, can a trust has the purpose as education as well as other public charitable objects? Or do we need to form a separate trust for educational purpose?
If you are to go into educational purposes and if you want to claim benefit under Section 1023, then definitely it has to be a sole object. Otherwise, you can go for a multi-object trust and one objection, education can be one of it. Then you will have to claim exemption under or deduction under Section 11 and 12, not under 1023C.
Now, next question is how to know what amount has been applied when forming Schedule LB and which year to fill in application year.
Please repeat the question.
How to know what amount has been applied when forming Schedule LB and which year to fill in application year. Schedule LB.
Schedule LB, it is a local trust schedule something.
Sir, they have not mentioned it in detail. It is from Jaipur. Maybe it's a question from the Rajasthan, Jaipur.
But I could not get it. What is this Form LB or Schedule LB?
Hmm.
Schedule LB is of ITR.
We'll move to next question then. The trust is running an educational institution. The sports field owned by the trust is let out on rent for sports activities to other educational institutions. Can the renting out of sports field be treated as part of educational activity?
Renting of a sports field which is part of your education, part of your education trust.
Okay. While calculating application of income,
The property which has been rented out, that is the sports field, that can be considered for educational and incidental to the educational purposes. There won't be that issue over there.
while calculating application of income, should we deduct expenses payable showing in the balance sheet?
No, as I said, now the trusts have to maintain on cash basis. So whatever actual expenditure you have done, that is you have paid, that is to be done in the ITR also. You have an opening balance of creditors, new creditors generated, then less payment, and then the closing balance. You have to reconcile that. And only the amount which is paid has to be allowed.
Okay. So, sir, what is the cash donation limit if ATG registration is not taken?
Cash limit is there in the ATG only, it is 2000 rupees now. For donor only. For donor only. So for accepting by the trust, there is no issue. Except that if you receive more than 2 lakhs, then 269 ST penalty provisions may apply. Otherwise, on the receiving end, there is no problem. On the payment end, 48.3 will apply and accordingly there will be disallowance from the application.
Mhm. So, is there any specific restriction to receive donation from foreign countries, individuals, or foreign donation can be received? Any specific restriction on foreign donation?
FCRA, you have to follow FCRA.
Okay. Next is from Surat only. A company is managing its CSR requirement through its subsidiary Section 8 company. Can parent company give loan to Section 8 company? Whether interest or write-off loan can be considered as CSR expense for parent company.
CSR expense, no, it cannot be considered in that fashion. CSR expense has to be considered according to the Companies Act, properly donated. It has to be actual application of the fund.
Okay.
These small types of tactics only create problem for the other 99% people who are doing genuine working.
So now, sir, should we conclude with your permission?
Yes, I think so. We should.
Yes.
6 o'clock.
So now,
You'll have many questions, I know.
yes.
Just for the information, we had more than 1200 plus viewers, even on this D day.
Right.
Yes, please, Hitesh.
Yes.
Thank you.
On behalf of ICS Direct Tax Committee, I sincerely thank our chairman, CA Piyush Chajed sir, vice chairman, C. Vishnu Agrawal sir, and most importantly, our speaker who has enlightened us today, CA Suresh Kabra sir, for their valuable presence and insights today, even in the busy ongoing schedule of ITR filing. Thanks to all participants for joining us. Please stay connected with ICI for future learning programs. Thank you once again. Have a wonderful evening.
Thank you.
Thank you very much to organizers and to the participants. And really, I could not do the full working because of the small time. The trust itself is a code in itself, and it requires big time to discuss all the provisions threadbare. But still, whatever I could be discussing, and members might have found it for their benefit. Thanks a lot for
Thank you, sir. Thank you, Kamran
Thank
sir.
you.
I think so. As you were speaking today, ITR 7 utility has been released ultimately,
Yeah.
which is applicable to the trust. So I'm sure the members would be helpful. It will give them some time up till 31st of October because the filing date is there. So thank you all. Tag team, we can end this session.
Thank you. Thank you, sir.
Thank you.
Thank you, sir. Yes, please. Can stop the record.